Recording.
Yeah.
There we go. So yeah, no need to disclose any private information. Don't worry about that. I'm not gonna try to get any private information from you guys because I also be in trouble. So
Yeah, inside information.
yeah.
This is also being recorded, so
So yeah, I mean yeah.
we'll go straight to prison.
Yeah,
The
we
evidence is
don't
gonna
want
be
that. And that'll be
uploaded.
expensive for the
Yeah.
company.
It would be, and you guys are on a great trajectory, so we wouldn't want to ruin that. Because you just posted
Yeah.
yesterday your update, and it was very impressive, I have to say. On Valor, I mean, you're almost at 1 billion US dollars, which is just incredible growth. And the 23% month over month growth was just amazing numbers you guys are putting out there. I think what the retail crowd must understand is that they should not really focus on the stock price for now. They should just focus on the fundamentals. And what I've been saying is we're seeing amazing growth when it comes to the fundamentals. Everything we want to see is there. Again, you proved it yesterday. So to me, what I say is long term, price always follows the fundamentals. In the short term, the price can do whatever it wants. And it's not just that. You guys had an amazing run, right? From 10 cents now all the way up here. So it's
Yeah.
been an amazing couple of years. So I just wanted to talk a bit about your guys' progress, a bit about the future, because you have exciting plans with some spin-offs you're doing. So I just wanted to touch a bit about that. And first, let's talk about the update you released. I just wanted to ask, where is this massive growth from Valor coming from? And do you see this as something that can be sustainable and continue?
Yeah, I can start. So, Valour, we have month over month, we have continuous inflows. We haven't had a month without flows in our products. So, the other driver, aside from inflows, is when asset prices in crypto appreciate, the month over month net inflows are additional sort of levers to when those prices recover even higher. That's sort of a maximalist catalyst for driving our AUM. So let's say Bitcoin was when Bitcoin was trading at $105,000, and then dipped all the way down into I think close to $78,000. During the course of those couple of months, we still saw continuous inflows into our products. So when you saw the alts recover and Bitcoin recover, our AUM shot even higher because of those inflows. And we get those inflows because we're continuing to build out our market presence, not only in the Nordics, where we do get a majority of our flows, but also Germany on the Frankfurt exchange and a couple of other exchanges there, and then Euronext Frankfurt or Euronext. Help me out here, Andrew. Two Euronext exchanges. Apologies. I'll just leave it at that. But yeah, and then on top of that, we're launching additional products.
Yeah.
We've gone from, I think, probably 50 at the start of the year. If you remember the tail end of 2024, we launched 20 products in one day, which I don't think you've ever seen any other asset management
Yeah.
type company do that before. And we saw that was timed really well because we saw crypto come up tail end November, December, partly because of the election in the United States.
Yeah.
And then over the course of this year, we continue to launch additional products. So that's our growth strategy, partly, and then expanding geographically outside of Europe, and then maintaining our foothold in Europe. So I think, yeah, it's really a simple recipe. I guess the way I would put it. There are some other things that are coming online over the course of the next couple of months to gain more visibility across Europe, and then some of the regions we're looking at for geographic expansion.
Okay.
Euronext Paris and Amsterdam just came to my mind. Sorry, got a lot of stuff floating around in my mind.
That's fine. Don't
Yeah.
worry. I completely understand.
Yeah.
So yeah, it's very, very, very impressive what you're doing, Valor. And now let's just touch on the new products you guys are launching because
Can I,
there's quite a few. Oh,
Again, yeah, Andrew wanted to cut in there.
yeah,
yeah, before we go to the new products, obviously I agree with everything that Curtis has said, but I think that, as a student of finance, we have to distinguish between the independent variable, which is that which we as managers of the company can control, and the independent variable and the dependent variable, which is that which we as managers cannot control. We have control over the inflows that come to the company. That's the result of our marketing, our work, the product mix, market expansion. What we don't have control over is the price of Bitcoin.
yeah,
What we don't have control over is if the price of Bitcoin goes up a great deal, but the altcoins remain flat, right? Because we're probably one of the most diversified
yeah.
digital asset managers, particularly given our broad portfolio of ETP products. So what happens sometimes is a Bitcoin might go up, but maybe the stock price doesn't go up as much as the Bitcoin goes up, or a batch of altcoins might not be going up as high, so that can have an impact. But the key thing is what Curtis mentioned, which is a pretty important fact. We have not yet, and we pray this continues. We're working that it continues. We have not yet had a month of net outflows, and that's a mark of the efficiency of the work that
Hmm.
management undertakes.
Yeah. And I guess to touch on that, I think we sometimes get some flack that we're not growing. Uh, and I think the biggest indicator of the fact that we are these inflows. Just to run through some numbers, in 2022 we did 38 million in total inflows. In 2023 we did just under 50 million. Last year in 2024 we did 124 million. And then thus far this year we've done 90.4 million. And of note, of that 124 million in 2024, 53 million came in November and December. So we've seen a significant increase in inflows over the past, what are we in August now? 8, 10 months in just under a year.
Okay. No, as I said in the beginning, your growth is very, very impressive to me, and you guys are performing really, really well when it comes to the fundamentals of the company and the products you guys offer. And yes, as I said, very, very impressive growth on Valour. It's gonna hit a billion in AUM in dollars, I think, very, very soon, which is gonna be an amazing milestone. Um, and now, before we touch on the product, I've had some questions on X regarding, because some of those products you're making spin-offs, you're creating companies. Um, I've had some questions regarding how your founders, Olivier's family office, is tied to them, because Latent Capital, I think it's called, Latent, I don't know how to pronounce it,
Mhm.
is also an
Latent.
investor
Yeah.
and an incubator of a lot of those companies. So I was wondering if you can provide a bit of clarity regarding governance or
Y-
anything like that.
Yeah. I mean, look, Leighton is Olivier's family office. Olivier has been involved in this industry since its early days, 2010, 11, uh, and has done really well in capital markets. He was the former CEO and founder of Hive Blockchain, or Hive Technologies
Mhm.
now, as it is. Um, and through that success, has been able to garner additional capital to start investing in other aspects of this ecosystem, or bootstrapping companies that you know today, like DeFi Technologies,
Mhm.
Valour, BTQ, and others that we're connected to. This is a pretty small ecosystem. A lot of people know each other and have had deep personal ties. So by nature, there's a lot of opportunities to cross-pollinate and opportunities to invest in other projects. And Latent Capital is another vehicle for Ollie to incubate or invest in either his own projects or friends or colleagues. I think it's as simple as that. Like if you look at DeFi Technologies and Valour specifically, the way DeFi and Valour were started, we didn't raise outside capital. It was all internally bootstrapped by founders, and it's still founder led. Valour was bootstrapped by Olivier and Johan. And then, you know, a little bit of an issue too for us is we haven't raised money in the capital markets. We've only done private placements, particularly when we spun up DeFi Technologies. I think we raised $10 million Canadian. That was all private placement through friends, family, and insiders. Then in 2022 and 2023, we did a couple of other private placements. I think another for 10 million Canadian, another for around 4 million Canadian. Also, Olivier, Johan, other friends and family and insiders. So he's putting his own capital along with other founders and with Johan and our other friends, family, and insiders into these companies and self-financing them without going to like the traditional route of raising through an institutional bank and getting I guess, institutions in. Unfortunately, that's what we wanted to do in 2023, or when we were in crypto bear market, but nobody would touch our company, quite frankly. So we had to self-finance and make internal sacrifices. So Latent is a vehicle for incubation and investment. And it's Ollie's family's office. I don't think there's if anybody's insinuating any impropriety, there's nothing there.
Okay.
Yeah, I might add that in the wealth management space, that's a very, very common thing. But B, what Olivier tends to incubate are companies that are synergistic or can end up helping what we're doing at DeFi. I mean, just because we don't respond to every threat or comment on X, it doesn't mean we're not aware of the fundamentals of the driving ethos behind it. Like one of the things I find absolutely amazing, because I've been in the digital asset space for some time too, is the fear people have if they see something about Olivier being associated with BTQ. I mean, I honestly, I guess this is a podcast, but I can't think of anything more galactically stupid.
I agree.
For the sole reason that the quantum risk is a real risk. And would they rather us have to be price takers by dealing with a completely disassociated entity? Or would they rather we have an associated entity that isn't taking the R&D risk on our excess profits as DeFi, building the technology that may result in tokens that in the next generation we're wrapping into capital structured instruments? I mean, this is math. And the furor that people have had that a founder in the digital asset space is deciding to address the quantum issue, I'm just surprised.
Well, and I think I'm going to try and draw a bridge here. BTQ is developing quantum infrastructure for digital assets. DeFi Technologies is a digital asset company, which will at some point start likely commercializing some of our internal IP and infrastructure. That will have to be quantum proof. We are, by nature, an easy way to pipeline the initial commercialization efforts of quantum safe infrastructure that DeFi would likely be able to monetize as well.
No,
look, another critical point is, if I may, we have to protect the intellectual property, the AUM that exists within the DeFi infrastructure. Now, we can either buy someone else's technology, in which case, I know the first thing that shareholders would say, they'd be like, well, man, you guys have known that quantum was coming. How come you have no solution for it? Well, the issue is, as is the case with a lot of deep tech technologies, they're not necessarily revenue generating now. They tend to be more R&D based.
Mm-hmm.
Could you imagine what the shareholder reaction would be if we were to be pumping all of our returns into a quantum-based R&D effort within DeFi?
Yeah.
I mean, it's a 22.
Yeah.
And this has to be dealt with, and the founder has decided to deal with it. And obviously, there'll be synergies much to the benefit of DeFi Technologies. The more successful BTQ is.
No, I completely agree. And full disclosure, I've also invested in BTQ since December. So I completely see.
Good for you.
Yeah, no, it's gone very well, I have to say. And no, I completely agree. I see the synergies between them. Obviously, the blockchain quantum is a threat to the blockchain, and we need someone to protect it. And digital assets must be protected, which is what you guys do. So, personally, I like that Olivier, because I consider him a very smart person and a great leader. I'm very happy that he decided to do BTQ and address this massive issue. So yeah, I mean, people on X go crazy about a lot of things. I mean, stock goes sideways for 3 months. All of a sudden, it's the end of the world for a lot of people, which I don't understand really.
Yeah, and but like we understand anxiety. We are big shareholders in the
Yeah.
company as well. So the stock price action, like for me, it's not fun. It's certainly very frustrating,
Mhm.
but we can't control day-to-day movements. We can't control macroeconomic factors. And I can tell you, we are all pushing internally to get a stronger shareholder base and get institutional capital into the stock. Like I was in New York earlier this week. I will be on the road the rest of the month along with Andrew. Andrew is pushing on geographic expansion to add more value to the business.
Okay.
We are singularly focused on building long-term value for this company, despite short-term bumps in the road.
Yeah, and on this, when I studied financial and risk engineering, particularly in the case of Canadian companies, empirical evidence always shows that after they uplist from our smaller Canadian market to the U.S. market, stock prices go down. There's a degree of profit taking after the run up to the uplisting. Now, it is. I'm sure you'll have other questions to address, but people have to ask themselves. We can receive 100 messages a day about the stock price. What is happening at market open? What is happening market on close? And they have to decide, do they want management to be spending their time responding on X, or do they want management ensuring that we're making sales, closing deals, and generating revenue? Like, it's an interesting thing. The expected return is always some feature of, revenue over time divided by the risk-free rate, by some sort of interest rate. And that's how you essentially find the model for determining, well, what is the stock price going to be? We have to remain focused on cash flow generation and revenue generation, as well as the stock price. But what we can't do is get emotional, like start panicking every morning, every market on close, because that would mean we're allocating your money, shareholder money, resources to being emotional and not ensuring that the company can survive on the basis of its foundations. One of the things people don't talk about is we, as a company, tend to have very strong reserves. Our treasury is not generated by the issuance of debt or the issuance of additional shares. Our treasury is a result of operating revenue, operating profits that are being reallocated. And Curtis always has a statement. I'll let him say it because when he says it, it's very powerful. But we are somewhat, we're amongst an elite group in terms of our revenue generating and generating profile vis-a-vis publicly listed companies. Curtis.
Yeah, okay. You could have said it, all good, but yeah, we're one of 3 profitable and cash flow generating publicly listed crypto companies, solely focused on crypto. The other is Coinbase, and the other one is Circle. You'll have a few others. It sounds like Kraken is close to an IPO, but and exchanges are very profitable. They're great businesses. I think, there's still opportunity out there because we do believe we're undervalued. I know a lot of our shareholders believe we're undervalued. We are certainly all very frustrated. And I feel that frustration on a daily basis, but I've never been more bullish on this company because I see where we're going. It's just going to take some time for the market to realize the true value of this company because we are still under the radar and we are pushing every day to tell our story, and we continue to refine that story. I think one of the bigger issues too is the market hasn't quite caught up to where we are today from where we were just a year and a half ago. We've done 2.5 acquisitions. We've added over $500 million in AUM. We've gone from $40 million in debt to over $90 million on the balance sheet as of the end of last month. That is significant change and quick change. And it takes people who weren't following close attention, who wrote us off, frankly. Everyone wrote us off in the last crypto winter. And now we're coming back around. We had a great run last year. We've cooled off a bit this year. Yes, it's been very frustrating, but we will turn this around. The market will realize the value of this company as we continue to execute, as we continue to generate more free cash flow, and as we realize the true, as we make people realize the true value of this company by sitting with them face to face.
Yeah. What is interesting is, my background was in venture capital, dealing in the digital asset space. And, you have the opportunity to look at many decks, many data rooms, many business plans. In the digital asset space, you get a lot of fancy announcements, but I hope everybody who's watching, next time they check the announcements, don't look at total value tokenized. Don't look at total value locked transactions. Look for profit and revenue. I'm serious, because what you will find is, in particular in the digital asset space, that is quite rare.
Yeah.
I mean, even many of the strategy companies that are, the flavor du jour, when you actually try to see, well, what is the fundamentals of that business? You have to ask yourself, can that business sustain itself on cash flows if there's a downturn? And the reality is, anybody may say, well, yeah, but there's no downturn projected, or maybe we're not in a big enough downturn. But as managers, you have to be prepared to do the work to ensure that the company can sustain positive wins and negative wins. Otherwise, you're not really running a company. You're running a bit of a lottery.
No, I
Next question.
Yeah, I completely agree with this. And for example, personally, I haven't looked at the stock price in a very long time because all I care about is how you guys are performing on a fundamental basis. And as you've said, you've really cleaned up your balance sheet, and your balance sheet looks great. You're profitable, which is very rare, because I own other crypto related companies, and frankly, most of them are losing money, if not all of them still. And
Then
yeah,
you should rebalance into DeFi.
I probably
I'm
I'll
kidding,
probably increase.
but
No,
probably.
I have been considering increasing my position, to be honest, and I think I will, because eventually the market will notice. It's hard for me. I don't know how they've not noticed already, but I think eventually they'll notice, because as you said, what you're doing and what you've achieved is rare in the crypto space. And you're growing a lot. You've done amazing acquisitions. And I think a question that a lot of shareholders have is that obviously you've grown a lot, you've made acquisitions, but as you said, those came from private placements, which resulted to shareholder dilution in the end. So moving forward, how do you balance the risk of shareholder dilution versus uh, growth? Let's put it that way.
Yeah, I mean, we're very conscious about this, and are going to be very deliberate about this moving forward. All of our acquisitions that we've made in the past year, Reflexivity, Stillman, and Neuronomics, we looked at those as being accretive. We acquired them effectively at a discount to what they were doing in revenue or what type of revenue potential they could bring to the table. For example, I think we acquired Stillman for roughly $2 million in share base compensation, and they generate they're going to generate $10 to $15 million this year baseline. So we see that as very accretive. Reflexivity has just added great value. They're a profitable company. They provide great resources and a megaphone to educate Valour's investors and to garner relationships with other cryptocurrency foundations that we can utilize to do one-off DeFi Alpha deals with, or wrap their token in an ETP, have them seed that ETP, and we get tokens on our balance sheet in that regard. So there's multiple ways in which we view this, and moving forward, if we were to do any acquisitions, it has to be accretive. We have to have the appropriate share price if we were to do share-based compensation or a share-based acquisition, or with some cash. So we are shareholders ourselves. Insiders and management own roughly 120, 130 million shares. So we are very aware of this, and we don't, when we do this stuff, we're also diluting ourselves. So again, if we want to be aggressive with acquisitions. We have targets in mind, but we need a higher share price, or the appropriate balance of paying out shares and cash when those acquisitions are to be considered.
Okay.
Yeah, absolutely. We have to be strategic. You don't want to be making. We're not in the business of venture capital exclusively. We're in the business of building value, and so by building value, we have to see, okay, if we acquire this company, what are the behind-the-scenes strategic benefits that will accrue to our existing shareholders and to our operations? And I think we've been pretty disciplined about that. And Curtis is right. We are all shareholders. And the funny thing is, prior to my actual making purchases that could show up on Cedar and Edgar, I mean, I didn't really know. So we have a family office with my mom and dad, and I was just saying, guys, you got to buy because the opportunity is good, the value is good. I mean, that's how I was thinking of it. So we were executing purchases that don't show up on the purchase list. So it's sort of like, I understand that the messaging is very, very important, but there are people who are invested. We are all aligned in the objective of maximizing share price. And I wrote to somebody earlier today that I will continue to buy, as will the family office that I'm linked with, for the foreseeable future. I view. I think everybody is in agreement that the stock is undervalued.
Yeah.
The question is where we focus, and our focus is on working. We cannot be in two places. We have not perfected quantum technology in such a state that we can be on X and on CEO.ca whilst signing contracts and reading them over.
I have
not
multiple tabs open, so I've almost figured out superposition.
Close
I'm
enough.
almost there. Yeah.
Okay. Perfect. Those are both great answers, and I think a lot of shareholders are going to be relieved by hearing this. And as you said, guys, you are also massive shareholders in the company, so any dilution directly affects you. So obviously, you're going to weigh the risks and benefits. And so far, the acquisitions have been very strategic and on point, I must say. So very happy with those. Now I wanted to just touch a bit on your treasury, since you mentioned the treasury. So there was a big increase from the prior month, a 52% increase from the monthly report you brought out yesterday. But the thing is, I noticed it was in Bitcoin, Solana, and Core. What happened to Ether?
We want to prioritize putting additional or rebalancing our treasury into Bitcoin. Obviously, a lot of the Solana is from our initial DeFi Alpha trade last year. You'll notice Sway, SUI, also
Yeah.
a part of a DeFi Alpha trade that we recently executed. And then with Core, we're looking at doing something with Core in terms of core strategy. So there's strategic reasons behind rebalancing to each of these. I think, really our focus is where are our strong points in regards to where we see price appreciation in terms of digital assets and where we're going to get the, I guess, most stability and growth. And internally, I think Johan, who controls our co-founder who controls our digital asset treasury strategy, views Bitcoin as more of an anchor. I think as most of us would agree. Solana as likely a really fast runner this cycle, and due to the nature of the fact that it is our second biggest holding in not only in regards to our treasury, but our exchange traded products. And Sway, I think, has been the top performer over the past year and a half in terms of all of the alts. And internally, we believe that's going to continue to be the case. And that's not any shade or disregard to Ethereum. I think it's just by nature where we have flexibility and where our priorities in regards to maintaining a treasury strategy that's going to perform well, and then also aligning with some of our external initiatives and priorities.
Okay.
Yeah, absolutely. There's something that I think people should look at. I think the total market value of Bitcoin is I think it's about 2.9 trillion or 2.3 trillion. I think the total market value of the crypto space is, obviously there's market fluctuations, but I was doing this exercise about a week ago, is about 3.9 trillion. So obviously Bitcoin is a huge piece of that. But as many people know, many people have referred to Bitcoin as sort of the new digital gold. It's the new, almost incontrovertible, as long as we are post-quantum secure, form of backing finance. And if you look at the global market value of gold, it's about 23.5 trillion. It's 10x Bitcoin. So if you're using Bitcoin as a proxy or as analogous to the incontrovertibility of gold in terms of what money used to be before fiat, then it goes to show that, of course, there will be fluctuations and movements and crypto winters, but Bitcoin could conceivably 10x before achieving a type of equilibrium if it were to reach a degree of parity with gold. And on that basis, whilst it is not a yield generating asset, there has been a gravity around the importance of Bitcoin as a store, a deflationary store of value. Beyond that, I think our entities are very yield driven. I mean, we worry very much about making money. We want to ensure that our products are embedded in profitable tokens, yield generating tokens, because we realize, as Curtis has outlined, we've been growing organically ourselves. So when that happens, you start to build a business around yield. So that gives you a sense of why certain digital assets are selected. Maybe they have utility, favorable yield profiles, and also why there is a fundamental belief and value in holding Bitcoin.
Okay. I see. It's interesting the strategy that you guys are following. Obviously, as a shareholder, I agree with the strategy. I think all of the assets you're holding in the treasury will appreciate over the next few years, and especially, as you said, a Bitcoin. But since we touched on some of the tokens you're holding, I wanted to go off and continue on the spin-offs that are coming up. For example, CoreFi, SolFi, KDX. I want to ask how's the progress going on with what the phases you've set up, and how do these eventually unlock shareholder value? When will we see them trading? If you can touch a bit on those topics and can share any progress, that would be
Ye-
good.
ye- Yeah, I can. Yeah, I can talk about what's already public, and
Mhm.
then give some context. So, broad context is you're seeing all this FOMO for these treasury vehicles, publicly listed treasury vehicles launching treasury strategies around Bitcoin, Solana,
Mhm.
Ethereum, some other alts, and because there's been this mad rush and this FOMO, and we see it as also froth. It's very reminiscent of previous cycles in which there's been a FOMO catalyst that has eventually turned into the downward catalyst into a crypto winter. Um, so that being said, we haven't necessarily taken pause, but we've had to be a bit more strategic in our thinking and deliberate on how we execute these in a market we think has become really oversaturated, and there aren't many vehicles that are differentiated from each other. And frankly, in my view, a bad actor is going to mess something up for everybody eventually when it comes to these treasury vehicles when they start trading at NAV or below NAV,
Mhm.
and aren't able to keep up with the pace of debt that they've taken on. However, we are still focused on launching a CoreFi strategy. Um, I think I can say, we're rather close. It's just dependent on a couple of things, of course. We still have the JV with Core Foundation, and it will be a differentiator from all of the other Bitcoin treasury vehicles, because it'll be Bitcoin treasury plus core plus yield. And we think that's an important factor when you're launching a new treasury vehicle. Also, building an underlying business that's generating free cash flow, um, as opposed to all of these other vehicles that continue to
Mhm.
continue to dilute or take on debt and not have an operating business. So I think what's important for people to realize when we're thinking about strategic initiatives is that we are more focused on long-term value creation and sustainability rather than short-term hype and
Mhm.
market plays that could potentially put us at long-term risk and risk long-term value creation in that sense.
Mhm.
Because we've been through the rough times. We survived the previous crypto winter barely. And now we've come out even stronger, and we want to maintain that position of strength, that ethos of conservatism when it comes to how we approach our strategic initiatives and making sure that they will build um, long-term value, and that they will stick around through what will come to be another hard time in the industry. That, if this cycle plays out like previous cycles. So, I think yes, CoreFi will happen in some shape or form, and I think I can say rather soon.
Okay.
And SolFi we have to that'll be the next focus on how
Mhm.
we execute from that front. In the meantime, we did launch a new business line in our DeFi advisory
Yeah.
strategy where we will be advising other public companies on their treasury strategies, whether that's from asset management to trade execution or through Stillman Digital. So we announced our first deal, I think it was a couple of weeks ago now. We have a couple of others in the pipeline that'll instantly add value to the company, and instantly add additional revenue through either monetary, taking in dollars, or taking share-based compensation.
Perfect. I really like. Can you also talk a bit about what's happening with Kenny and KDX?
Andrew?
Yeah, absolutely. The process continues. The technology continues to be compiled. The idea here is, in some of these emerging markets, liquidity is an issue. And one of the things that Valour and DeFi Technologies has proven itself to be quite effective at are building capital market instruments that bring liquidity. Now, obviously, with tokenized assets, you may sometimes have instances of tokenizing a whole bunch of assets that are high in value, but you don't really have any liquidity or market in which to either unload those assets or trade them. Through Stillman Digital, through our own internal market making practices, we've become very good at doing that across many digital assets. And so we continue now to deploy it in a way where we are solving a problem that a region has, and it does continue. The revenue model will be a mix of market making fees, trading fees, listing fees, and the technology. We are working very hard to ensure that it is as in-house as possible, because I think that's been a key to us being able to squeeze out margins where other firms pay third parties for certain services. Our vertical integration enables us to extract revenue from a broad range of services, and we intend to use that same model with the KDX.
Okay. Very interesting, and it's a very interesting strategy you're following there. I've also seen that you've also signed Singapore MOUs, and you have some Turkey partnerships. So I was also wondering how the Asian market entry is going, what your plans are, if you have a timeline on what could happen with the Asian market.
Yeah. So I don't think it'd be appropriate for me to give timelines here.
Okay.
Obviously, we are looking at a number of large markets where we see a lot of activity. And we have to remember some of our portfolio companies. For instance, Amina Bank out of Switzerland has offices in Singapore and Hong Kong. We have effectively an office in the UAE. So we have definitely put in, we're beyond the feeler stage in all of these markets. And the idea is to have instruments or our services via Stillman, via Valour, active in these markets. And in many instances, that is happening. That said, it is not fast. And it's not fast for a reason. It's not fast because if you want to do it right, we're in a situation where we have to deal with different regulatory regimes. And we also want to make sure when we enter a market, we're I don't want to say the term guaranteed profitability, but we want to be as close to having a pretty robust book of business from the word go. So that means all the plumbing, all of the elements need to be in place so that we're not in a situation where our costs of operating may exceed the revenue that we generate. And one of the ways in which we do this is we're focusing on cross-listing of our existing instruments. So that means they're not necessarily new issuances. They're effectively repackaging and cross-exchange listing of our existing instruments. And the team has been really effective. I think right now we have 78 ETPs listed on about 8 exchanges. So we have had success in expansion. Obviously, we're still very interested in growing markets where we want to be stronger, for instance, Germany. Hence our first DeFi Insights symposium event, which it's invite only, but it's basically designed to enable us to interact with asset managers and institutional investors. That will be taking place on the 25th of September. But that same approach, that prudent approach, cost-sensitive approach, and revenue-focused approach is what we're using as we enter other markets.
Okay.
Yeah, and I think, look, we've announced geographic locations we're expanding into and JVs as early as what 10 months ago. And I know some people are very frustrated with what seems like it's taken a very slow process. Certainly understand the frustration. And partly because of that frustration, we are now sort of withholding other locations we are exploring or actively engaged with. And we won't announce those until we're basically at the 10 or 1 within the red zone. So there will be some surprises here, hopefully by the end of the year, if not early next year, on locations we haven't even talked about, because I think we've taken an internal stance to let's wait until we're very close to the finish line before we announce anything. Whereas previous, we sign a JV, we would announce it. And then of course it's taken some time because we move at startup speed. We're all very entrepreneurial. We work from the time we wake up to the time we're probably going to bed, and then likely waking up in the middle of the night because something is going on, and then need to get it across the finish line, and then going back to sleep. That's basically my schedule. My fiance isn't very happy about it, but she understands. But yeah, we're pushing really hard. It's just that you have regulators and institutions who don't move as quickly as folks who work in a startup who are on 24/7. These folks are 9 to 5, so it's a very different pace, and something we have to work around.
Absolutely, and I have to tell everybody that Curtis works all the time. Like, he is always accessible. I don't even know what time zone he's in, so kudos to Curtis for that. But I think that's a critical thing. We're focusing. I'd rather that we under promise and over deliver on execution than we hype and juice. We add things, we exaggerate. That doesn't help anybody, because what happens is if you spend your time hyping up a stock or juicing stories, that's great. But then when you actually deliver on a result, people are like, yeah, but we thought that, you guys were going to have nuclear fusion in a lunchbox, right? Like, so I think it's better for us to stick with what is real, be understated, but now people will understand that when we make an announcement, the substance is considerable, and whatever the positive implications are to the business, they are concrete.
Okay, I prefer the strategy of under-promising and over-delivering. That I think little surprises would be very good. And also, you said the retail crowd tends to be impatient a lot. So yeah, I agree with what you guys doing, and I see.
And we are impatient as well. To be fair, so things don't move as fast as we like.
Yeah.
Trust me. Yeah.
But I will tell you, it's actually funny because we're in discussions now with I'll just say an exchange, and it takes weeks to get the paperwork, but when they send us the contracts to sign, like literally within 10 minutes, Of course, after everything is approved, within 10 minutes from our side, boom, it's signed. We know where we want to go, but you have to deal with sometimes 10 different counterparties, regulators, exchanges, and whatnot. They all have to be aligned before you get to go. And everything has to be perfect. And our idea is we will be consistent, but we will be dogged and effective. We will not be emotional with other people's money. That is not the way you want to run a public company.
I completely I completely agree. And since we're talking about regulators being slow, and you know we've also discussed so far all the great stuff you guys are doing, I wanted to ask a general question now, which is, what do you consider as like one or the one or two biggest risks in the next few years for your growth strategy?
I thought you were going to ask about market movements. I've been waiting for this question, but I guess not. I think, honestly, we tend to run a bit paranoid. Obviously, the quantum threat is a threat. That's significant. And I don't want to speak out of hand here, but I'm going to answer your question a little bit indirectly. The DeFi ecosystem is optimized to be able to deploy instruments across a range of asset classes. And I think that as a result of our paranoia, our hustle, through neuronomics, through other ecosystem partnerships, some that have been announced, some that haven't, we are addressing the risks we perceive by ensuring that we're able to move across different asset classes, hybridized instruments, next generation digital asset instruments, and that vertical value chain of being able to originate product and wrap them in capital market regulated instruments. We're focused on deploying that because that's where value is created and kept. And we want to make sure that as the new generation of digital assets come to bear, we're there and ready to support. I think a good example of that, for instance, is we have been looking closely at things like the Tether Gold. There's a Tether Gold ETP, right? So that is a slight move in a different direction. We have been looking at stablecoin infrastructure. That is a slight move in a different direction. I think there are some signals about what concerns us, but instead of frankly belly aching over it, we're taking action to make sure that we're protected.
Yeah, I think to add on to that, like the core of this company, the philosophy that we're bridging capital markets to decentralized finance, we're also bridging DeFi to capital markets. So not only were we issuing, our primary business is issuing ETPs that that are cryptocurrency focused, but we're now starting to build out additional rails and pipelines to connect these two ecosystems. You'll also see an effort from us to build out additional infrastructure in these areas as well. So I guess that's what I can say for now in that regard. But by nature, we are a technology company. We are building our own in-house technology. We are squeezing margin from every issuance of the stack. And at some point, we are going to monetize that technology or white label it in some fashion. So that'll be our next sort of step once we've built out our core foundation across not only the European markets but these new and emerging markets.
Okay, this is very interesting. I'm not going to poke more into it because I don't think you can say much about about the
Yeah,
infrastructure and everything like that. But it's definitely very, very interesting and exciting.
but I would say like look into depends.
Okay,
Yeah.
I like the hint. Um, so now about a bit about the market movements, as Andrew said. You know, stock price has been, as we said multiple times, has been going sideways for a year now. While crypto has basically had a very good run, not Bitcoin specifically. Altcoins have some have followed, some have not. It's been a weird altcoin season. Where do you see one the value of these coins go? Like for example, the ones you're holding, Solana, Bitcoin, Sway, going in the next few years, and where do you see the value of your company being in the next, let's say, 2 to 3 years? Um, it would be very interesting to hear your opinions on the whole one, the stock market and what's happening with the stock, and two, also on
Yeah.
the crypto market.
I'll keep mine as concise as possible. Governments are going to continue to spend. Central banks will continue to put more dollars into the system and inflate their local currencies. Liquidity is what drives the price of Bitcoin. As the price of Bitcoin goes higher, there's more liquidity in the system in Bitcoin that drives additional liquidity in all the rest of the alts. If there's even more liquidity in the private sector is what's gonna help drive altcoins. I guess this is like a rather long conversation, but governments have no incentive to cut spending, so they're going to continue to do that. It's going to continue to inflate money, and I think digital assets are going to continue to play a bigger role
Hmm.
in whatever this next phase of the monetary system is. You can already see it now by governments, sovereign wealth funds, institutions, and public companies adopting Bitcoin or altcoin treasury
Hmm.
strategies. That's only going to accelerate the pace of growth. Um, you'll see booms and busts, of course, but long term, this industry, this asset class is in its infancy still. I think it's less than I think 10% of the global population owns some sort of crypto asset. So that's only going to grow. There's a lot of pie to be eaten there.
Hmm.
Uh, and as we expand geographically, as we add to AUM, and as the underlying assets increase in value, that's only going to add to our profitability and free cash flow generation. That's going to only add to our ability to expand and execute. So the reason I'm so bullish over the medium to long term on this company is because I'm bullish in the industry. I'm bullish on how it's going to shape the world. And I feel like we are ahead of the curve on a lot of these efforts, as opposed to some of these other traditional cryptocurrency companies who don't really have an underlying business or
Hmm.
just playing on the hot FOMO topic of the day. We are focused on the long term. We are focused on shaping the world. We are focused on deploying and executing on a decentralized infrastructure and providing access to retail and institutions to take advantage of this opportunity.
Yeah, I obviously, I mean, we're bullish on the space. I think that this technology, it's early, but it's revolutionizing how capital markets
Hmm.
and money is moving. I think with regards to the stock going sideways, we obviously can't say very much. What I can say is we are incredibly aware.
Hmm.
We're very, very aware. And we are taking action.
Okay, that's good. That's good to hear because a lot of the comments I've had in the past week
Yeah.
since I announced the interview has been, can they do a special dividend to kill the short sellers? Can they do share buybacks to kill the short sellers?
Yeah.
And in general, they wanted to see what's happening with the short sellers because you announced some stuff earlier. So,
Yep.
So
So
yeah, we are gathering, I would say, data and collecting any potential evidence.
Okay.
As of right now, there is no tangible evidence of manipulation. However, we're still gathering data. That's pretty much all I can say on that. It is something that we are focused on, that we are aware of. But over the long term, like, execution will kill any short interests, and we are focused primarily on execution. And then, of course, like, we are all shareholders as well, so we want to protect. You know, over 90% of my net worth is in DeFi. So I think that should tell you what my priorities are.
Yeah,
I think that's nice to hear.
You know, something. I think something people need to understand is it is easy whenever you don't have a legal obligation to not just blurt things out, to make announcements about these guys need to be doing 5 different things and do them all at once in order to stop this particular problem. But it doesn't matter what you feel if you decide to engage in a court action or anything like that. It matters what you can prove. And if we are going to deploy corporate resources and time, we will do so with our eyes wide open, with a preponderance of data, and effectively, and that will not be litigated on X or CEO.ca. That is not a winning strategy, right? So our objective is to be good stewards and to ensure that should action be taken, it is the right action and it will be a winning action.
Okay. Again, it's something that I'm not going to poke in more, because I think you said what you can say on the topic. And as you said, at the end of the day, performance, and if you keep performing, if fundamentals keep being on point and growing, I think that's what eventually is going to kill the short interest. You guys have an earnings report coming very, very, very soon. So let's see, maybe that gets some shirts to cover. But I wanted to also touch on something that was announced yesterday, because it's becoming the real world asset space, which is becoming very, very interesting, and you're seeing a lot of major players entering the space. You announced with Stillman Digital a partnership with OZN, I think, I don't know how to pronounce it, to drive institutional adoption of the RWAs. My question is, how does this integrate with your other business lines?
Yeah, if I may, I think I tried to address this earlier, but I probably used political speak. RWA are really manifestations of digital assets that are backed by something other than a chain or the validation of a network. So it goes without saying that in the next generation of much of what we do, you know, as these instruments become more popular, we intend to be there and be there early, not last, right? So they're tokenized instruments, and we're very good at working with tokens. It doesn't matter what those tokens are. And our infrastructure is optimized for dealing with not just tokens, but debt, with equity, commodities to some extent. And we intend to leverage the full technological infrastructure that we have at our disposal for the benefit of value creation and our shareholders.
Okay. Again, it's a very, very interesting space that's being created with RWAs, and I think it's only going to keep growing, and we're seeing adoption, as I said, by the major players. We're seeing tokenizations happen now everywhere. I've seen, I think, somewhere in the Middle East, they're even tokenizing real estate. And I think that's also something that will be adopted hopefully worldwide soon, because I think it's a very, very interesting concept. Now, another thing I wanted to touch on is the Firelab stablecoin and what's happening there and the Kraken integration. So, can you talk a bit about how the progress is going? When can we see an actual product launch?
Yeah, I mean, I'm in touch with the CEO, Adrian, excellent guy. They're developing. I don't think I am comfortable giving their specific timeline
Okay.
for a product launch. But it is a work that is in progress. They're dealing with regulated institutions, and I don't want to do anything that can maybe jeopardize regulatory application.
Okay.
So we like that. That's the thing. Again, like online, one can say, "Oh yeah, it'll do this, that, or the other," but as soon as you're working with the entity and you realize how much time goes into particular applications, we need to make sure that everything is correct. They get the approvals they need, and when announcements can be made, they'll be made. And Kraken is a distribution partner. That is, but that is what Kraken does. So we have to. It is a great project. We need to give it time to get off the ground. It is a beneficiary of the Genius Act, without a doubt. But I also want to manage expectations vis-a-vis timing, because I've seen, some comments, online that have been just uh, that have been maybe, yeah, maybe a little much, but it is a solid project, and we're very excited for it. The team is working. I've been in talks with the CEO at least once every 2 days, and I'm excited to see what comes of it.
Oh, yeah, I'm also very excited to see what comes from it. And online people can say a lot of things, but at the end of the day, you guys, I think you guys are handling it great. And I think also your guys' engagement with the community has been great. And I think other people should follow too in what you're doing. Like I see both of you replying to people, engaging with them. Because I think winning over the retail crowd can be very, very beneficial. We've seen them send stocks, for example, Palantir. It's at $450 billion valuation with a net income of 1 billion. That's just retail going crazy. And we also saw it with
Yeah.
Circle when it went public. So I think winning over the retail crowd has, it has its negative side too, that at times they can be a bit much. But I think overall, you guys are handling it great, and because I've seen a lot of times people are trying to
Yeah.
poke you a bit and annoy you, but you guys are handling it very
No,
well.
it's not. So I'll speak on that briefly. Like, we have a great shareholder base. We have some shareholders that have been with us and stuck with us through the ups and downs. And, we really can't thank them enough for that
Mhm.
support. And frankly, we've never been in a stronger position from a business ops perspective, from a capitalization perspective. And that's only going to continue to improve, at least from a core business perspective. And we are very transparent, or as transparent as we can be, because we understand that people have invested their hard-earned money into our stock, and in a sense, they are betting on us. So it is our obligation to be as transparent as we can, and to communicate as frequently as we can with our shareholders. Um, so I make myself widely available. Shareholders have our direct numbers. They text us, they email us, they call us. So we're always talking with them. And I want to make that known. I am widely available. If you
Mhm.
have questions, I am available to answer your questions. I'm able to address your concerns. I'm able to chat with you about where the company is and where we're going. Andrew has also made himself available. So I think we've probably been more transparent than I would say 99% of public companies out there,
Mhm.
and we will continue to do that because that is our obligation.
Yeah, I know Curtis is always available. Look, I try to be as responsive as I can. People WhatsApp me directly, people email me, and we always respond. It's what we won't do is break the law and tell people
Yeah.
things that we're not allowed to tell them. And the other thing we're not going to do is, you know, I, I grew up in a medical family. It's you don't want your surgeon to be running and saying, "Oh my gosh, there's blood today." Like you don't want that degree of mania. Our job is to be calm and to execute. But of course, there'll be you know people on X or in communities that will have something very dramatic or something that is completely untrue. Unfortunately, that's the world we live in. 100% of the shareholders that I have communicated with, as Curtis is saying, either in person or via WhatsApp, have been respectful, genuine concerns, great questions, great suggestions on how to improve, and we love them for it. And we take their advice, but obviously we can't say yes to everything
Yeah.
everybody wants to say, or everything everybody wants us to do. That will never happen.
No, as I said, I think you guys are doing a great job with your interactions on X. Like last week, I was talking with Eric Jackson, and we are talking about Open Door, for example, and a comment I had, and we both had actually, is that their CEO doesn't have an X account, has zero presence on X, and they could be basically Eric got the whole retail crowd to jump on Open Door, and people got excited. If they were, for example, more transparent, they were explaining how their business is going to grow, what they're doing for the business to grow. I think they could win a lot of people over, but they never did. Kyrie Wheeler still doesn't have an X account, which I think is, how can you be a CEO in this age and time and not have an X account is a bit, you know.
Yeah.
So I think you
It
guys
was
are doing
actually
a great job.
Yeah.
Sorry.
I wish I didn't have an X account,
I know me.
but
Yeah,
you know.
I get you.
well.
It can get that much.
A shout out to a shout out to Eric Jackson. I had a meeting with I think about a week and a half ago in Toronto. Honestly, he's a great guy. He's a
Yeah,
really smart guy. Very very humble guy.
yeah,
Very very genuine, and has had some great insights, some great advice for DeFi technologies, and he's just so easy to talk to.
yeah.
So I don't really know much about like online personas or whatnot, but when you meet somebody in person, look them in the eye, and we spent like 2.5 hours talking about just everything, and it went by like that. So I think he's been a great supporter of the community, and I think he's a stand-up guy. I appreciate his involvement.
No, I completely agree with it. Every time I talk to him, yeah, as you said, such a humble person. Um, has been through a lot in the past, but I think he's come out stronger, like DeFi too. Um, And a lot of people are now quoting him and saying, "Why are you not pumping DeFi? Why are you not pumping DeFi?" Because he's talking all the time about open door. But you don't need to pump it. Eventually, as I said, if you guys keep performing the way you are, people will notice. And that takes me to my next question, which is obviously you guys are trading on a massive discount right now, in my opinion, and I think this is the opinion of a lot of investors. So why do you think the market right now is applying this discount, and what do you think they're waiting to see before they fairly value the company?
Yeah, I'll answer first. One, we are still under the radar. We're Canadian. We were a Canadian listed company. We were
Mhm.
on the OTC, but we had a majority of our volume on the Canadian exchanges. Um, and so that means we need to do more work on the institutional marketing front.
Mhm.
If you look at the recent filings, we've gotten some institutions in. not in the large numbers that we need, but institutions clearly are accumulating. So that should send you a signal on some of the work we're doing, or how they view us. And we'll continue to push on that front. Andrew and I, well, Andrew's always on the road because he's the primary point for the geographic expansion, but I'll be on the road all of August, September, part of October. There's another conference in November and December. So I'll be away from home quite a bit, talking with funds and institutions, marketing the company and telling our story. So we need to get our story out there. That's number one. Number two, I think we need to do a better job of actually telling our story and communicating what the business does and where it's going. Most people will look at the business and be confused by all the moving parts. The focus really, just look at Valour, look at DeFi Alpha, look at Stillman. We're building a fully integrated tech stack for ETP issuance, market making, trading, arbitrage trading, and effectively being a financial services provider to the decentralized finance ecosystem. So the simple way to put it is we're a bridge or a pipeline between DeFi and capital markets back to DeFi. And we're going to continue to build and scale on that. The core of decentralized finance is cryptocurrency protocols and trading. So if you look at our business model, we're built on trading and then crypto infrastructure. Secondly, I think people will just look at our business. They'll like, oh, they're an asset manager. So they list and launch products and collect a management fee, and then they call it a day. They don't dig deeper. We're not just your typical asset management company, or at least Valour isn't. Valour, like we keep mentioning, squeezes margin from every stack or every aspect of the issuance pipeline. So yes, we list and launch products, collect a management fee. We also have a trading desk in Valour that does the trade flow of the inflow and outflows of our ETPs. So we collect trade spread. We also make the market in those products, the market making fees. And then we're able to stake those assets because they're cryptocurrencies and in order to yield on them. We're also able to run MEV on Solana holdings. And then we're also able to arbitrage because we're connected on the front end to the exchanges or brokers. And then we're also connected on the back end to the centralized and decentralized exchanges. So when a investor places an order for an ETP, we can sometimes realize profit when they place that order, and by the time we fulfill that order via centralized or decentralized exchange and the price has gone up, we just have to realize the order at the time when the price was executed, or the order was executed, and realize the spread on that. So that's the other aspect of DeFi Alpha, is arbitraging those trade differentials. So I think that's the big missing thing there. We're getting valued solely based on our AUM and not the monetization engine that we've built up.
I think that Curtis provided a very detailed and accurate assessment of what the market doesn't know. I think, in some ways, it's even there's a simpler aspect. I think a lot of people don't even understand blockchain or digital assets, period. Right? Yeah. So when we seem to be doing so many things in that space, as opposed to they just buy Bitcoin, which a lot of people can understand, they get confused. And I also think that we have to do a better job of going out and actually asking for investment in our products, investment in our stock. But we have created a vector for us to be able to do that. We have a DeFi Insight Symposium, the first of which, I think I mentioned it previously, is in Frankfurt on the 25th of September. And all we're doing is we're inviting regulators, exchange heads, pension funds, institutional investors to come and spend the day with us. So it is invite only. But we get to spend real time talking to them, not 20-minute segments, 15-minute segments. They get to have panels with members of our team. They'll get to communicate with Manfred Knopf, the executive chair of Valour, get to understand where all this technology fits in, how we monetize it, and why we think our technology and our capital markets access and our approach to these markets is strong. I think there's enough content within the DeFi Technologies ecosystem that once we have these conversations and they're able to meet with senior executives from Stillman, they're able to meet with senior executives from Valour, you're going to find that that familiarity breeds a comfort with investing. You know, with sales, which is basically what we do whenever we're trying to attract investors, it's not necessarily the first contact that wins or closes the deal. They need to see us often and understand that we're thought leaders. And this symposium, which will take place in Frankfurt and other cities around the world, New York, London, Zurich, on an ongoing basis, gives us an opportunity to display that thought leadership with the institutional investing public.
Okay. I think, yeah, eventually the market will notice you guys promoting the company and the story. Is obviously very, very, very helpful. You touched on it a bit now, Curtis, but I wanted to ask, maybe I should have asked in the beginning this. You're obviously kind of a complicated business because you have a lot of verticals and a lot of different things you're doing. So if you had to, in a minute, explain what is DeFi and what we're doing to someone that's not invested in the company, how would you explain your business?
We offer the most broad-based exposure to the entirety of not only Bitcoin, but the rest of the centralized finance of any equity on the market. I would say other than Coinbase, because Coinbase is the only other equity you're going to find in the market that gives you exposure to all of these tokens because of the fact that they're an exchange. Whereas, you know, Galaxy, great company, they hold Bitcoin, Ethereum, Solana, maybe a few other alts, and now they're pivoting into the AI infrastructure. So it's a very different business now. They're not just focused on crypto. And then Circle, just a stablecoin play. Whereas we give you exposure to all of it, infrastructure, cryptocurrencies, trading, eventually stablecoins here in the short term. And the biggest component is everything we do, we look to generate yield on top of to return additional value to our shareholders. So I think, and I've mentioned this a couple of times, we are building a bridge from DeFi or from traditional capital markets to decentralized finance. And then we have, because of our relationships with the cryptocurrency foundations, we're building a bridge from decentralized finance back to capital markets as well. So you're not going to get that value of exposure from any other equity in North America.
I think a lot of people will like the answer, and I think it's you guys, as I said, you guys are a complicated business, but I think you made it a bit clear and straightforward about.
I think people understand ETFs now. We are an asset manager, but with a monetization model on steroids from your traditional asset manager. And then we have several trading verticals: market making, liquidity provisioning, custody, and arbitrage. And then, of course, we have a research side of our business, just like a Galaxy does, or some other asset managers. So, we are very, very traditional in the sense of your standard capital markets, I would say, asset manager or bank. But we've found ways to squeeze margin everywhere we can. So we don't really outsource because we build our own in-house technology. And hence you not only have DeFi, but you have DeFi Technologies.
Okay. I think it's very straightforward, and I think a lot of people were confused with what DeFi does because you're also constantly announcing new products, and something people were a bit wondering is neuronomics, and how does that basically increase the value and enhances DeFi Alpha. Um, what algorithms are operational right now? How is that going? Are you seeing value from the 10% stake?
Yeah, I believe the stake is definitely more than 10%,
Okay.
but I'll leave that to Curtis to determine.
Yeah,
Yeah,
it's 50,
there's absolute value in
it's
that.
52%, 52.5% or something like that.
Oh,
We
okay.
bought a majority share of it.
Yeah,
Perfect.
yeah.
Yeah.
So it is absolutely valuable because it gives us access to regulatory licenses that will enable us to make products that can be sold to larger institutions and things like pension funds. And then on top of that, it also gives us access to technology that enables behavioral based machine learning trading. So that means we can have different types of active in active ETPs or actively managed certificates, which are sort of a Swiss unique type of investment vehicle. So it really helps us not only to jump the curve in terms of or jump the line in terms of regulatory rights to create innovative products. The whole premise of this platform or this company is that they also use machine learning, I guess now it's referred to as artificial intelligence, certain predictive algorithms to generate trading strategies that offer higher return profiles. So we can basically imagine making ETPs that have a higher degree of automation in the future that would be an actively managed instrument with a machine learning or an AI algorithm that makes some decisions in terms of the investment capabilities. So, yeah, there's a lot of value in that space.
Okay. I think it's a very, very interesting stake you have now in the company. AI is slowly becoming a very, very big part even in financial institutions, and we're seeing a lot of AI related trading products being launched, even from like BlackRock, Vanguard. They all have their own AI trading models. So I think you could create in the future some great instruments that, as you said, you could sell to bigger players like that. And another question, since we're talking about those bigger players, is have you ever considered being acquired perhaps in the future? Uh, yeah, let's make it the last question, I think. Do you think in the future potentially you would be open to being acquired by a bigger financial institution? Or is your focus on building something very, very big, as you said, to bridge this gap between normal financial institutions and DeFi? What is your ideal plan, let's say, for the next 5, 10 years? Growing alone or potentially being
Yeah,
acquired
I mean,
and being a bigger part of, let's say, BlackRock or whoever?
yeah. Um, Very simply, like our management's DNA is in this company.
Hmm.
It's kind of I would akin to having a child or something that you love very, very dearly and giving it up to somebody else, particularly right now or anytime in the near future when you have so much planned for it, is completely out of the question.
I like that answer. And
Yeah, I think
no, go
I
ahead.
think oh, sorry. I was just going to say, I think from my side, our primary focus is just maximizing shareholder value, getting the share price to where we think it should be, which is multiples above where it is. And if somebody were to come and give a lowball offer, we know the value of the company and what we have. That's not going to shake people who have been through upswings and downturns and have survived them all. So we're married to this company. We like it very much. We believe in it.
Oh, great answer. I believe in the company a lot too. And I must say, both of you are so passionate about the company, the future. And I really love this. I want to see people that lead the companies that I own that are very, very passionate about the business and growing the business and executing and creating shareholder value. And this creates a lot of optimism because you guys have so much passion for what you're doing. So I don't think you would let us down because
Yeah.
usually very hardworking and passionate people, if they're smart, and you guys are obviously very smart, I think they achieve great things, and I think you will in the future achieve some
Well,
amazing
Andrew's
things.
smarter than me, so I'll
No, no
I'll give him
chance,
more
no
credit.
chance. But
But
George,
like,
we do this because of great
yeah,
shareholders like you too. I mean,
yeah,
we're
I
thinking
appreciate it.
about the shareholders each and every day.
yeah. And I want to say that passion uh, applies to everyone else in this company, CEO, co-founders, everyone. Like, we aren't even the guys who founded this company, and uh, like a lot of people a lot of the folks in this company that have been around the past few years have suffered and sacrificed in ways that will never be public, to get us through the hard times to where we are now. Yes, we aren't happy with share price currently, but this is temporary and we've been through worse and we will come out stronger. Like, we are well positioned. We just have to get out there and continue to tell our story and continue to execute, and we will do that.
100%. Look, if you on the weekends, Sunday morning, 4 a.m., 11 at night, person to talk to. I go to the office on a Sunday. Who will be there? Holiday. Like it's just the passion. They eat, live, and breathe this company. Johan is a veritable genius who, in his free time, what he'll do is talk about indexes and financial instruments. It's this is who the people are. So, uh, whatever Curtis just said, he hit the nail on the head. I mean, we love this place, we love the company, and we're willing to fight for it so that it receives its maximal value and recognition that we think it deserves.
I really love those answers. And I think eventually the market will appreciate and value you fairly for what you actually deserve. Because, yeah, I think the discount right now is unwarranted if people actually pay attention to the story and how you guys have progressed and turned things around in the past 2, 3 years. Is just amazing stuff, and it's stuff you don't see every day with publicly traded companies. So I'm really proud of the whole team as a shareholder. I'm personally very, very happy with the performance. As I said, I'm not even looking at the stock price because frankly, I'm in it for the long game, so I couldn't care less about what it does in the next month or
You're more
two.
disciplined than we are.
Yeah, I mean,
Yeah.
I believe in the
Well,
vision. I believe in everything you guys are doing. So I think slowly this is going to create massive shareholder value, and I also see where the space is going in general, and I think you guys are going to be a major force in the space. So I'm here for the long run, and yeah, the stock price for now can do whatever it wants. I think eventually the market will notice and will value you properly.
yeah.
Might not be in a month, like a lot of people want in a month the stock price to just skyrocket, but eventually, I think people are going to make a lot of money. By being it just takes
People already have.
people, and yeah,
Yeah,
people
it's
already have.
it
It
did.
was 10 cents,
Yeah,
right?
yeah,
So
yeah. But no, we appreciate you, George, and appreciate you for giving us this opportunity to chat with you and then your audience. And I know a lot of your audience is interested in DeFi and our current shareholders as well. And again, I want to stress we are widely available. Curtis at DeFi.tech, Andrew at DeFi.tech. Happy to answer any and all questions at any time. We are very transparent, and we, value everyone's input or opinion, and their time and money, frankly.
perfect, great. I think this is a great point to end because also Andrew, we've kept Andrew, I think, for a bit longer than
Yeah,
we should
I do
have.
have to go, but I wanted to stay. I'd like to stay obviously as long as possible, but I do have to go.
No,
But honestly, I'm so appreciative for this. So thank you so much.
no, I also appreciate you guys taking the time to talk to me and providing. I tried to ask as much as people on X wanted, plus some other stuff, and I think a lot of people will be happy with the answers. So and I think a lot of the other shareholders, we really appreciate you guys taking the time, and yeah, keep doing what you're doing because you guys are doing amazing job, and I think we're all very proud of you. So as shareholders. So yeah, we're just happy shareholders with it, which is I think the best thing you can have. So really appreciate your guys' hard work, your passion, your effort, your sacrifices. So thank you so much.
Thanks, George.
All right.
Perfect.
Thank you,
So
George.
have a great
Bye-bye now.
weekend,
See you guys.
and yeah, talk to you soon.
All right. You too. All
Bye.
right. Bye.
Likewise.
Anytime.
Bye.